Hello to everybody. FutureTrend channel is glad to welcome all of our subscribers. For the date of 15 June 2018, we start our everyday analysis of different currency pairs trading in the foreign exchange market. The number one topic discussing by market participants at the moment is, of course, the resuming weakness of the euro currency. That's because of highly negative view expressed by ECB during its last meeting that had place yesterday. Readiness by members of the ECB to leave its negative benchmark interest rates for extended period of time, even till the end of 2019, of course, sent the euro strongly to the downside, as you could see on the charts. The euro dollar trading around 115.61 at the moment. That's around two big figures from the highs registered during previous trading session about 118.50. And of course, now the market is once again concentrated on the lows of May, registered at 115.10, and break and subsequent closing below this level for sure should mean lower levels for the euro dollar from technical point of view, because from fundamental point of view only much better economic data coming from the eurozone could stop the euro dollar and euro currency, euro crosses, from sliding further at the moment. So for those looking for lower levels of the euro dollar in case of breaking below 115.10, the next level is more or less interesting level to watch, located around 113. But of course, in case of resumption of this dynamic we've seen in the euro dollar starting from the middle of April, and that means that the uptick to the 118.50 we witnessed during previous trading sessions was just a correction, and that means that for sure the euro dollar should go lower. We will discuss what kind of levels we could see in case of breaking below 115.10. First of all, let's to see how the situation will really develop. Should we see a kind of correction, consolidation from a strong weakness of the euro currency witnessed during previous trading session, really can we close below 115.10 on the weekly basis? Once again, let's discuss this on a possible closing below next week, at the beginning of next week. The same applies, the situation applies for the other major currencies where the dollar is still on the uptrend, on the uprise. And here the situation, for example, in the dollar yen, also very favorable for a further improvement, for a further move to the north of this currency. Of course, a lot will depend on the trade policy conducting at the moment by United States administration, because we know that in case of worsening of this trend, the Japanese yen could receive some boost, and that means that dollar yen could go lower. But of course, here the situation is really very favorable for another spike up. Also because of fundamentally strong United States economic data. Yesterday we had a very excellent retail sales report coming from the United States, and that means that in the foreseeable future we should see a retest of a longer term downtrend line located around 111.90. Anyway, as regards the dollar yen, our position is not so strong in favor of the United States currency because of risk aversion sentiments still prevailing, maybe not prevailing, but that could resume anytime in the world. And from that point of view, we will use a possible move to the May's highs around 11140 and a possible retest of 112 level to resell the dollar yen. As regarding sterling, sterling is it seems ready to break below the lows of May, registered at 132.05, and that means that probably in the next couple of sessions next week we could see a retest of another important support barrier located around the lows of October 2017 at 130.27. Break below psychological important level of 130 should send the cable even lower. Let's see, to 127.70 and even in extreme cases to 125.90. As regarding the dollar Swiss, here the situation is also very favorable for extending of the dollar to the upside, and as you can see we are back to parity level, and here the situation means that probably in case of break above 10055, the highs of May, the next level to watch will be the highs of the beginning of 2017, located at around 103.35. So all in all, such kind of situation. And as regarding some other currencies, Australian dollar is also moving to the downside, and in the foreseeable future we could see a possible retest of the lows of May around 0.7412, and that should mean that the underlying bearish trend is back in play, and in the foreseeable future during next couple of sessions the pair should retest, even could test another barrier, downside barrier located around 0.7330. So all in all, the situation at the moment is rather profitable for those keeping long dollar positions. That means that any kind of pullbacks of the euro dollar to the upside should be used as a selling opportunity. And here, for those looking for our strategy in the euro crosses, you could see that we are also here tender our strategy to selling instead of buying the euro currency, and the same applies for the commodity block of currencies. We still conduct a possible extension of the dollar weakness, probably to buy currencies of commodity block with a very tightened stop loss. Thank you very much for all of your attention. We wish you a pleasant weekend and hope that you will be again with us on Monday, 18th of June. Bye bye for now.